All right, what's going on, everybody? So welcome to a back testing session. Um, we're going to back test a session we did on Nas 100 just a little while ago. Um, I profited and won this trade, but I did make one mistake that could have cost me the whole trade. So we're going to go over on how to avoid that. And the subject is, I'm actually going to take this out. We're going to talk about how to avoid fake outs. So number one, avoid fake outs. Control two holds. To avoid and then also we're going to talk about to identify tests and entry. Those are the two things we're going to talk about. So first things first is you want to try to avoid fake outs. Now, I'm going to show you in this session how these fake outs came about. So I'm actually going to go back one candle. So when we look back, first thing we want to do is go over the back testing session. Then I'm going to go over the live recording and show you exactly when we should have got in, when I should have got in, and when we should get in the future. So this next candle, I believe, came down. This was the this red candle was the 9:45. So at 10 o'clock, I think it was 10:30 is when price decided to go that direction. So now we're at the 10 o'clock candle. Now, when we play this candle again, you're going to notice that price came down, looked like it was going to break here, but then it pulled back a little bit. That's a fake out. The institutions, what they want to do is they want you to think that price is going to go a direction and you initiate or execute your trade, whether it's a buy or sell. And then they purposely pull price back to put you in a huge drawdown or to blow your account. Because they know if you get into a huge drawdown, you're going to be nervous and anxious, and you're going to want to close that trade. Or if you have a small account, which most retail traders have, you're going to have to close your trade or you're going to blow your account. So they do that purposely to get you trapped. So that's the reason why you want to avoid these. So the key here is whenever you see a clean break and retest, this is difficult to do, but you have to do it. You see price pushing down, you want to look at the timer of the candle. If it's a 15-minute candle and you see price pushing down, it's gaining momentum, and there's at least 13 minutes left in that candle, then there might be a lot more juice in that candle. So then you got to ask yourself and say, okay, I have plenty of time to get into this candle, but I need confirmation that it's going to push a lot further down. And then I'll get in, because now I'll get enough of an outbreak on this candle, enough volume to make my money and then jump out. But if the candle doesn't do that and it keeps on resisting and then going back, resisting and going back, resisting and going back, they're trying to trick you. So the next thing to do is to wait for the next candle to close below and then drop and get, and then let it start dropping and then get in. So I'm going to show you a live example of that. So price pushed down and retraced back, right? I made a mistake and got in, got in a huge drawdown, but fortunately I was, you know, able to hold it. Then this next candle closed below here. This is probably still best is at this point, and this may have been the candle. This may have been a candle where I tried to get in at. That's 10:15. Yeah. So I think I tried to get into this candle. It was either this candle or the candle before. At this point, I need to see it really break out and push down. And if it does, I'll probably initiate my trade. And the candle, it has to be at least, you know, 13 or 14 seconds left in that candle for me to even initiate it. If I see there's 2 minutes left on that candle, I'm not getting in, because then that candle coming at the end of the timer probably doesn't have enough energy to push down. So it's probably going to come back up again to gather its energy. And sometimes the banks do that because they know that's what's going to wipe your account. So, yep. So I was correct. So this candle here, or to circle it, this is where I made my mistake and got in. Now remember. And what I need to do, and the mistake I made is that I saw that price was pushing here, and I was saying, well, it's ready to go, let's go. But what I made, the mistake I made is that this candle was at the end of its timing. So the 15 minutes were almost up. So what I should have did is look at the timer and say, okay, I see that there's only a minute or two left in this candle. Let me wait for the next candle to close below and catch momentum and then sell it. How do I know that that was the appropriate entry? So price went down. And if I would have got in a little bit here and waited for it to gather momentum and went all the way down here, that's about 44 pips and Nas. I would have definitely made my money. But that's what happened. So that's why it would have been best if I waited for this candle to close below. Great, I hit my TP1. Cool. It would have been nice if I waited for my candle to close below, because then I would have caught all this and been safe. So that's why snipers are very important. You have to identify those and avoid fake outs. That's what the institutions try to do to wipe out everybody's account. And so ultimately, I already got out the trade before this next candle closed, and it went down even further. Now, what we're going to do is look at a live recording of exactly how it played out. Give me a second to load it up. So I'm going to go ahead and play the clip, and then I'm going to pause and show you guys what I'm talking about. Like it's punching through. I wanted to see a little bit more. It's pushing through. Let's see a little bit of a wick though. It's pushing back a little bit. Yeah. And so as you can see, price is moving back and forth, and it's really, really respecting this breakout point. So I haven't initiated my trade yet because I was looking for the fake out.
The 200 EMA and that demand zone.
Yep. So we got 15 seconds until we hit the 10:15 candle. So if the candle breaks past here, let me forward this recording a little bit more to get to that point. Give me a second here. This is perfect where I want it to be. Looks like price might be starting to break through this area. Yep. Need to see it grab some momentum. Okay, so as you can see here, it's understandable that you probably might want to get into a trade because it broke the 200 EMA and it broke this area, but it didn't break and retest yet. That's a mistake I made, so I tried to initiate my trade. The other mistake is that there was about 8 minutes left on this candle. Now, is 8 minutes enough time for a candle to make another run before the next candle closes below? I would say it's very tricky, but I would say don't. I would say if you see that there's 7 to 8 minutes left on the candle and it's already made a big run and it's kind of hesitating, pushing back slowly and pulling back, wait for the next candle to close above. You'll be more safe that way. That'll give you all the confirmation you need. Now let me go ahead and play this recording. All right, I'm getting in on the sell. Yep. See this here. It's understandable to get in if you see this momentum, but you want to wait for the next candle to close below and then hit it. And that's what I normally do. Is wait for the next candle to close below and give you that confirmation. Because the banks could easily push price all the way down to here and then push it all the way back to get you a huge drawdown. That's what happened with me. Now, what I want to do is kind of fast forward this recording. So it goes to the next candle. Let me pause this recording and try to do that. Before I move this recording, I want to make a side note. You can kind of see that it's still been 7 minutes and this candle hasn't really moved. So this is a clear indication that it was still a good time to sit in our hands and wait, because if price is really ready to move, especially if you're trading an indice pair is probably the most volatile assets in the market, or at least one of them. So if price truly wants to go the direction it wants to go, by now at this point, really, because it's been a minute, price would have just went already, and you would have been way in profit by then. So anytime when price hesitates like that, you want to wait for the next candle. So now let me go ahead and play the next part. Let me pause this recording and see what we get out of that. All right, so it looks like candles finally closing down. The mistake I made was actually getting in a little too early. I should have waited until this candle closed and then got in, but it's all good. So notice what I just said in this recording. I should have got in this candle. Now this is a perfect example because the candle closed below and now it's starting to gain momentum. So then you're at the beginning of the candle and that's about 14 minutes into this candle. So that means that this candle has plenty of time to push down some more. That's the type of candle you want to get in here. So now I'm going to finish with this recording here. So let me share my phone screen here real quick. So first of all, let me trail my stop loss here. Let me pause this recording real quick. So we're good. So now, so you see this was a perfect entry because price is really pushing now. You'll see that. So $58, $62 in profit, $595 profit today. All right, so as you can see, had I got into that candle at that time, I would have made my $250 for sure. But that candle held enough for me to make that. And I'm going to show you why in a minute. But since I had the stomach to hold that huge drawdown, I made $598. Let me play this. So we still got the second one. As you can see, my second partial trade kept on going. Prices at. So now you can see that I made money at this. So now what I'm going to do is stop this recording. We're going to go back to the real chart. Hold on. based on that reporting, you can see why it was a good idea to get into this candle here, because that was a total of, you would have got in here, it would have been around 43 pips, 44 pips. So if I calculate this, so I try to make $250 a day, so $250, and you divide it by 44 pips. So I would have only had to get a little bit over 5 pips to even get that. So I could have made my money just off of this small candle here. Now, funny thing about it is, once I had made my money, if I had trailed my stop loss and let my second profit trade go, price would have went down even further. You see? So this is more confirmation that this was the perfect time to get in once it gained momentum. Because now another candle formed and gave us more pips. That would have been more money. Now let's see what else the candle did. And then of course, another one closed down. And so now let's go current price. And the result is that price smashed way past my first take profit. So this is proof right here that getting in this candle was the best way. And that gave us a total, see if I got in here, a total of over 1,400 pips, 1,400 points in NAS. That's a lot. But that would have been a very good bag. But it's a lesson learned. We still make money in this trade. It's the most important thing, but that's how we can actually avoid getting in that situation, avoiding fake outs and knowing when to get in, and the close, when the candle closes below or closes above. That's the key. And after it closes below or closes above, if it continues to gain momentum, then you want to get at the beginning of that breakout candle, and that's how you'll capitalize. So that's it for this video. This was just a little bit of a training video on how to avoid fake outs and how to identify clean break and retest and a breakout candle for a perfect sniper entry. So we'll continue to practice this so we can hone in on our skills. See you guys next time.